Good afternoon, and thank you for attending Red Cloud's Green Energy Conference. I am Michael French, Vice President of Sales at Red Cloud, and today we are joined by Richard Pearce, CEO and Director of Southstar Battery Metals. Southstar Battery Metals is focused on the selective acquisition and development of near-term production projects in Brazil. Southstar is driven to create fundamental value in the battery metals sector for clients and investors with real projects that have strong intrinsic financial and operating metrics and that can be profitable throughout the resource cycle. Their Santa Cruz project, which is 100% owned, is located in the second largest flake graphite production district in the world and is located in the Bahia state of Brazil. Southstar has an experienced executive team with strong history of discovering, developing, building, and operating profitable mines in Brazil. With that, Richard, I'll turn it over to you. Thank you.
Thanks, Mike. Again, my name is Richard Pearce. Happy to be here today. Thanks to Red Cloud for putting this on. I'm excited to speak with you today about the Santa Cruz Graphite project in Brazil. This truly is a fundamental value play in one of the premier battery metals jurisdictions anywhere in the world. I'd like to start off with just a couple highlights that I think are strong differentiators for us. And number one is just a very proven management team that's had decades of experience in taking projects from an idea to paper through to construction and production. We truly are mine builders and operators, and I think that's a strong differentiator when you're looking at the market sector. I mean, we've done this before. We've got other things in operations. We're very experienced at taking things and getting them into production. So it's something that I think is important to be able to prove kind of a track record of building as well as operating mines. Second thing I always like to highlight is kind of the phased approach that we're taking to production. Phase one is basically a 5,000 ton per year pilot plant with about $8 million CapEx. Phase two, the way it's envisioned currently, is a 25,000 ton per year con plant with an approximate $27 million CapEx. I really like this approach for a couple of reasons. One, it recognizes truly how the battery metals market, but certainly the graphite markets work. It can take you anywhere between 12 to 18 to 24 months, depending on the application, to qualify your material. So it's not like you can just turn the plant on and immediately start selling value add products. Second reason I really like it is basically from a risk management standpoint. It allows you to work through the kinks, get to know your ore body better, your recoveries better, develop those important commercial relationships, and really be working towards getting your material qualified and finding a home for all your products as opposed to just one or two. And finally, I think it's an intelligent way to really allocate capital. So as opposed to kind of turning your mining engineers and geos loose on trying to maximize NPV and IRR, this approach is really focused on trying to size phase two such that it's based on take-or-pay sorts of commercial relationships, firm commercial pricing, and real market conditions. Just highlight a couple other advantages to the project. This is a world-class large flake deposit. We have approximately 64% classified as large flake, meaning it's plus 80 mesh or greater. Again, when you're talking concentrate, the higher the grade and the larger the flake size, in general terms, the better the pricing. So again, this will allow us to have a majority of our concentrate at very good pricing and profit margins. In terms of geology and the upside potential, again, we have a huge land package with 13 claims, over 13,000 hectares. We're really just playing on less than 5% of the overall land package itself. We've got 7.5 kilometers of strike identified, 10 to 15 drill ready targets. We will be drilling this year as well as next year, looking to significantly expand our resources and reserves. So there's really a strong geologic potential for significantly increasing our ore body here over the near term. And we've fully tested the met circuit. So because Brazil has been producing graphite for 80 plus years, we ran 30 tons through a full pilot plant program. We produced just under basically a ton of samples. We've been sending out samples to dozens of different suppliers worldwide. They all liked the product and are looking for more. As part of the qualification process, they're looking for 1 ton, 10 ton, 20 ton. So, in general terms, everything's been tested. We have very good product. We recently put out some very favorable testing results as it relates to value add products like purified graphite, expandable graphites, as well as coated. and uncoated SPG. So again, very high quality material, and it's been fully tested from a met side. Just briefly over a little bit about the capital structure. Again, 77.5 million shares outstanding, 112 million shares fully diluted. Insiders own approximately 22% of all the shares, and institutions own approximately 7%. Again, very simple corporate structure. STS, as Michael mentioned, owns 100% of the project. There is no debt, and there are currently no royalties or other encumbrances to the project. Just briefly talk a little bit about the management team and the board. Again, great group of folks that I've been working many with for over a decade. Very good capital markets experience, very good operational experience, and very good Brazil experience. So again, great group of folks, been working with them for a really long time. Also like to point out that a large percentage of the executive management team, including myself, is based here in Brazil. So just real briefly about myself, I have degrees in economics and engineering. Moved to Brazil full-time in 2008, currently based in Sao Paulo. So been here for a really long time. I spent most of my professional career based out of Denver, but have 20 plus years in the mineral resource working throughout the Americas. Let's talk briefly about some of the overall advantages and highlights of the project as well. It's 100% construction ready for phase one. It's a very mining friendly jurisdiction that's been continuously producing graphite con for 80 plus years. Very simple open pit mining. It's an oxide ore deposit, so there's no drilling and blasting. At surface mineralization, so extremely low strip ratio. As I mentioned, again, it's a proven flow sheet that's been used in Brazil for a long time, with one important exception being that we will have no traditional pulp tails or tailings dam. And instead, we'll basically be using filter tails. So the water's taken out of the tailings, and then filter cake is co-disposed in the waste dump. So it's a very environmentally friendly way to go about doing this without obviously the environmental hazards of having a traditional tailings dam and the permitting headaches associated with it. Again, the project is fully licensed and permitted, and there's a specific side that kind of addresses the infrastructure that we'll talk about here shortly. So the project has basically been de-risked, except for obviously the execution risk associated with construction. So again, that's why I think it's very important to have a very experienced management team who's been there and done that. Again, the licenses and permits are all up to date. We're stepping into production in a phased manner. Extremely low environmental risks. All our waste have been characterized as inert, non-dangerous, benign chemicals, et cetera. We're basically in the first quartile of cost as it relates to OpEx. Very low capital intensity. Again, it's a fantastic opportunity for folks to be diversifying their supply chain away from an Asian dependence. And the other great thing that gives me a lot of comfort is really Brazil Graphite is very well understood and liked in the marketplace. And it provides an important bridge, especially to North America and Europe for supply chains. You can just kind of briefly walk through the infrastructure, because I don't know another project out there that kind of has similar advantages that we do here. So we're basically 1.3 kilometers off a paved federal highway. It's multi-lane. Again, the power station is a couple kilometers away. The gas pipeline is a couple of kilometers away. Water will be provided on site. So again, most of the important infrastructure is already in place. In terms of logistics, we're 270 kilometers away from the major port of Ilhéus. We're 500 kilometers away from one of the largest container ports in Brazil, in Vitória. We're an easy day's drive away from most of the major industrial centers. So again, in terms of logistics, we can easily access internal markets as well as external markets and get our material to market very easily. And I think another thing that's important to always point out, again, because Brazil has been continuously producing graphite for 80 plus years, and we're on strike from other operations, there's a very experienced workforce that we can tap into. Many of our folks are ex-employees of other producers. So there's folks with 10, 20, 30 years of experience, both on the commercial side as well as on the production side. And there's not a lot of jurisdictions that can say something similar to that. Again, sustainable development really is our normal way of doing business because we have other operations in production. We truly understand how important it is to engage the community, that very open, transparent interactions with the stakeholders, et cetera. So we like to fairly characterize our risks. We like to really focus on trying to minimize our environmental impacts. We like to focus on really being engaged with the community and all the stakeholders as we kind of walk through this process. So this is a team that's very experienced at looking at ESG and is very good at kind of walking through the different processes and having methodologies behind all of our way that we go about doing business and engaging. As far as global markets go, again, I think this is one of those graphs that gets a lot of folks excited, and I'm sure there's lots of folks that have seen this graph. Currently, there's about 1 million plus tons of graphite demand out there for concentrates. By 2025, that's expected to basically grow to around 2 million tons. And by 2030, that's expected to grow to somewhere around 4 million tons. Again, Brazil itself is unique in that it has a very large internal demand for graphite concentrates to the tune of about 80 or 90,000 tons per annum. So that's a strong differentiator between our project and many others. We can sell all, if not a good chunk of all our products internally to Brazil. But aside from that, basically, what does this mean for producers, right? So if you look at these demand projections, basically between now and 2025, 10 to 15 new mines have to come online. And I'm sure, as everybody knows on this call, it's a significant amount of time, effort, expense, et cetera, to get something from an idea all the way through to production. So we feel very fortunate to be where we are today with a fully licensed, permitted, construction-ready project getting ready to spin into production, given these supply and demand dynamics. And for my money, I think graphite is the perfect battery metals to really be focused on. It's number one in terms of percentage growth, and it's number two in terms of overall tonnage growth. So when you look out across the space, again, graphite to me is the best battery metal to be positioned in. A couple new projects in a couple jurisdictions as it relates to cobalt, lithium, or some of these other metals, and you can easily meet the supply. Graphite is not like that. It's going to take significant investment over many, many years to kind of be able to get the supply and demand equilibrium back into balance. And Brazil is obviously the one of the best jurisdictions to be playing in. So we're currently ranked number 3 behind only China and Australia in terms of critical battery metals. As I mentioned previously, Brazil's been continuously producing graphite con for 80 plus years. Brazil itself is producing graphite, iron ore, bauxite, manganese. It's number 7 in lithium. It's number 8 in nickel. It's number 14 in copper and aluminum. So this truly is a premier battery metals jurisdiction anywhere in the world. And it's a great place to be located, particularly as it relates to the centers of commercial production for Europe as well as North America. So again, I think there's some logistical advantages that we can take advantage of here. Let's talk briefly a little bit about the resource. Again, 15 million tons at 2.3% CG. Most of that converted over into 12.3 million tons of reserves at 2.4. We'll be mining basically at 3.4 the first couple years. So again, very robust reserves and resources, strong fundamentals as it relates to financials. Again, $81 million NPV5, 35% IRR, 4-year payback from the start of construction, 3-year payback from basically the start of production. And South Star itself is extremely undervalued by any metric compared to most of our peer group. And I think a lot of that has to do around the fact that we got our final license approved December 31st of 2020. Since then, we've really been pushing hard on raising the profile of the company, get the message out there. We've actually been one of the best performing shares here over the last year to date, as well as the previous 12 months. This next slide I really like because it basically compares CapEx to IRR, and it kind of shows a bunch of projects that are clustered here around 20% IRR, but they're obviously 100, 200, $300 million CapEx. Again, many of these projects are probably unfinanceable right now. This graphic basically walks you through the same story. Again, Southstar is extremely undervalued. It's comparing market cap to study phase, but we are fully licensed, fully permitted, and ready for construction. So in general terms, again, the project I think is very robust, fantastic, very high quality product. Brazil is an obvious location and jurisdiction for battery metals. There couldn't be a better time in terms of battery metals and having a project queued up for production. And again, the team is very experienced with constructing mines, getting them into operations, and we're very well aligned with shareholders. So again, great project at a perfect time with a great team. So in general, that's more or less our presentation today. I'd like to thank everybody for participating in their interest and open it up for questions.
Awesome. Thanks, Richard. That was a very thorough presentation with the kind of limited time that we had here. I know you touched upon this on kind of slide 13, but one of the questions that came in was in terms of battery metals, why invest in graphite versus other battery metals? And I think you can kind of get more granular into this, specifically why Southstar, just because of the quality of product that you guys have in the ground. Because I know from industrial graphite prices, it kind of varies between 500 to 2,500 a ton. And then if you have that battery grade graphite, which you guys do have, it's kind of at that 3,400 to 4,400 a ton. So maybe kind of get a bit more granular as to why graphite and why Southstar specifically.
Sure. Well, I think this graph, is really important to always kind of have in the back of your mind. Again, I think graphite is one of those metals that is best positioned to take advantage of the growth. And again, why I think Southstar is an interesting opportunity is you obviously want to produce and sell 100% of everything that is coming out of your mine. So you need to find a home for everything to be profitable. And so I think that's where, when you're looking just at con, having a principally large flake deposit you can get a better price in the marketplace just for con. And then as you look at basically our recent results, we put out fantastic results as it relates to expandable graphites. Purified graphite, we got to 99.9993. So it opened up a world of sectors to us, including nuclear. And again, the pricing on some of these products, if you're talking con, you're anywhere between $600 a ton all the way up to $1,400. For battery metals, you can be anywhere between $2,500 to $5,000 a ton, all the way up to some of these high value add products, which for nuclear applications, for example, it can be anywhere between $20,000 to $30,000 a ton. Because of the high purity we're able to produce and the high yields that we're able to get when we're producing it, we should be very profitable in the first quartile of cost, which is what we're always trying to be in as it relates to, kind of weathering the inevitable cycles that happens in commodity space in general.
Absolutely. I think that's a very important point to highlight to the investors in the call, and how you're differentiated than all the other graphite producers out there right now. Another question that just came in is, currently in terms of phase one, is it creating free cash flow, or is it only a proof of concept exercise?
Bum, 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 bum. So, and the appendices of our basically our slide deck, and this is the same slide that's on the website. We produced a model which is basically walking you through just the phase one results. And we did this basically for banks so that they could look at kind of our project. And why don't more companies do this phased approach? Mostly because they're not profitable at small scale. So if you look through our results here again on the NPV5, it's 30. So this was based on basically phase one operations for 20 years with a terminal value. This is all just based on reserves. So again, $31 million NPV5, 32% IRR, payback in about 3.4 years. We're talking basically 546 on our OPEX, while we're still using 1285 as basically our basket price. Most companies don't do this because they're not anywhere close to being profitable for these smaller scale operations. So again, I think a strong differentiator for us is we'll be profitable from day one. We're putting a small amount of, it's a drop in the bucket when you say, oh, we're going to produce 5,000 tons of concentrate compared to 1 million plus in a sector that's growing exponentially every year. So again, we'll be able to look at where we create the most value for our clients. We're extremely profitable from the get-go. And we're really going to be focused on profit margins and creating a lot of value for our clients and our shareholders, as opposed to trying to be everything to everybody and producing huge tons and volumes. It's really going to be focused on creating high value products that have interesting profit margins for us and are creating high value for our clients.
Absolutely. And unfortunately, we're out of time here. So kind of it was a perfect way to finish there, Richard. And just wanted to thank you for taking time in your busy schedule to present for us today, and wanted to thank everyone on the line for attending our conference yet again. Thank you very much, and have a fantastic day, everyone.
Appreciate it. Thank you.